where are we at cycle-wise? Is this regular?
Yeah, to me, it doesn't feel as dire, I think, as it seems to be on the timeline. I think, the timeline's interesting because it is a subset of sentiment. I think also what has had attention during the cycle is, I think the hard thing with crypto is that there is so much jeopardy in everything you do. And so when you go to do something novel, that the risk really spikes. And that is purely from the challenge of orchestration. So
Back again. Kain, thanks for joining us. How are you doing?
yeah, thanks for having me back.
Yeah, absolutely. Lovely backdrop that the team have got you sorted there. The studio's looking fine.
Yes, yeah, lots of little secret merchandise in the back there.
So I want to have a bit of a selfish question to start off. There's a lot of, I don't know, people jaded on the timeline. A lot of people kind of disenfranchised. You've been around for quite a while now in crypto terms. Like, where are we at cycle wise? Is this regular? Like, I can't put my finger on it, so I'm going to ask someone who's got a little bit more experience than me.
Yeah, to me, it doesn't feel as dire, I think, as it seems to be on the timeline. I think the timeline's interesting because it is a subset of sentiment, right? Not everyone is on the timeline, shouting from the rooftops, right? So you do tend to get particular voices. I think also, what has had attention during the cycle is what sort of dominates the sentiment as well. And so a lot of the people who have seen very large audience growth have been in the Solana ecosystem talking about meme coins. That's been topical, that's had attention, and so now those voices are the ones that are still dominating the timeline, and for good reason. They're kind of wrecked, right? So it's not too surprising to me that we have a bit of negative sentiment out there versus, say, if this were 2016, 2017, you would have a lot more Bitcoin maxi vibes on the timeline. Those are the people that were main characters, and therefore I would imagine they're having a much better time than everyone else, right? 25% pullback in Bitcoin prices is nothing to lose sleep over. So if you're in the Bitcoin maxi camp, all in on Bitcoin, you're having a great time right now. So I think it just depends on where the voices are coming from, where the noise is coming from.
100%, 100%. I completely agree, and you can also tell that a lot of newer market participants just have no exposure to Bitcoin whatsoever.
Yeah, unibias is real.
Yeah, yeah. Jesus, it's an alpha. So aggregation theory. I've been reading a little bit more into this, kind of because of what you guys are doing, and then taking it to its extreme. Is this something that you've kind of set out with to try and stick to that principle and build out a product, or is this just kind of a byproduct of trying to fix this crypto UX problem we have, and is that just kind of like a byproduct, and does that lead us towards aggregation theory, or like which one comes first?
It's an interesting question because if you go back historically, right, early DeFi summer, even just prior when DeFi was first emerging as a category, we had probably 5 or 6 dexes that were floating around: IDEX, Ether Delta, Bancor, Uniswap, and then you had a few others pop up over the next kind of, I guess, probably 12, 18 months leading up into DeFi summer. And so you had this thing that people had said was not real, right? Which was like AMMs and on-chain trading. People were like, this will never work for a whole bunch of reasons. You can't do order matching there, et cetera, et cetera. And, empirically, this was proven wrong, right? And it's really been proven wrong now. But you had this interesting situation where there was no infrastructure for arbitrage on chain. It was like literally artisanal arbitrage, right? And so handcrafted each transaction, right? And so arbitrage was really slow. And if you wanted to get the best fill, you kind of needed to have like 8 tabs open, and you're like, is it going to be IDEX? Is it going to be Uniswap? Is it going to be Bancor? Is it going to be some combination? And very, very quickly, people started popping up to aggregate, because they're like, this is just annoying. No one's going to want to, go and check 5 different quotes from different things. And even if you did want to check 5 different quotes, you certainly don't want to go to 3 different venues, split your order up, 40, 20. Like, it's just like, you're like, oh, this is super annoying, right? And so probably the first people to do this really well were 1inch. But there were DEX aggregator wars, right, back then, and it was very crazy. And so this trend of like aggregating fragmented liquidity is a very obvious thing to have. The user experience is just very clearly better. The question I think that we are asking at Infinex is, where is the best place to aggregate? Like, which layer do you aggregate? Because you have DEX aggregators, and you have had for a long time, 1inch and a bunch of others, Kyber, et cetera. And they do a very good job, but they have gaps. And so, unless you have a perfect aggregator, you kind of want to do then meta aggregation. And we saw this as well, right, over the last 3 or 4 years, where it's like, well, we're going to aggregate the aggregators. And then, like, it's just a pyramid that keeps building up at the top. At the end of the day, the biggest advantage that you can have, I think, is being in a position where you have a rich application that has the ability to simulate the transactions through the various aggregators and work out off chain what the best route is, and then execute it. Now, that is something that is not necessarily easy to do in a permissionless fashion, right? And I think that that's why Infinex has a significant advantage over some of the other people who've tried to do meta aggregation before. We have this rich application that can go and simulate transactions, can see what the fills are, see what slippage is, work out how to slice up and route orders, and you don't need to do it on chain. And to do it on chain is incredibly difficult if you're trying to do this on chain. And so I think that we have an advantage, and I think it kind of makes sense that the sort of final destination for aggregation is at the app layer, and that the app layer won't be on chain. It won't be a DApp, a decentralized application that's running on chain. It'll be an application that is actually living, somewhere up, off chain.
All right. So I think next step from that, hopefully it hasn't cut into what the back end of your answer was, but so I think people are beginning to understand the concept of chain abstraction, but there's also a couple of other aspects of this as well, in, I suppose, account abstraction, asset abstraction, and then someone kind of floated the idea to me the other day of, what about like application abstraction? So if I go to Revolut and I can get exposure to, I don't know, 3-4% on my GBP, my pounds, I don't necessarily know what's going on under the hood there. It's not exactly an application, but I don't know. Is there anything to unpack there, as we kind of, as you say, where do you aggregate the stack and where do you kind of like abstract the stack as well?
It's interesting. I think the challenge with fintech has been that it is a terrible architecture to build on, right? At the end of the day, all of fintech is like a wrapper of this like janky, COBOL 1950s infrastructure, right? And no matter how nicely you wrap it up, it's going to be bad. And so I think that the challenge for fintechs in sort of innovating over the last 15 years has been, on one side, regulatory, right? Because, being a fintech, you're kind of in a regulatory sandbox from the moment you're born, which sounds nightmarish, right? And so, you're going to struggle to innovate there.
Hell.
Yeah, exactly. Yeah, you're in reg sandbox hell. And then on the other side, like from an architecture standpoint, the stack that you're building on is just a piece of shit. And so, everything about your life is terrible. I would not trade places with a fintech founder for all the money in the world. And so on the DeFi side, what you have is this permissionless composability. So someone builds a cool thing like Uniswap, and those pools are there for anyone to connect to, right? That's just not possible with banking infrastructure, even as a fintech who's partnered with a bank, right? You turn up the bank and you're like, hey, we just need like one, can you just open up that one database? And they're like, yeah, no, we're not doing that. Whereas if you're in crypto and you're like, hey, we need to connect to this particular interface, they're open by default. That's shifted a little bit over time. We've got more closed source stuff, but the default is still open source, and you can always find someone who's doing something that you can interface with. So it doesn't matter who you are. You can be a 12-year-old dev in India or Pakistan or something like that, and you can just turn up and wrap Uniswap and get all of the access that anyone else could get, who's living in New York City, next door to Hayden, right? And so that, from an architectural standpoint, gives you a lot of flexibility. And then on the other side, the reg side, you have the ability to kind of operate in this gray zone, which allows you to do stuff, move fast, break things. And particularly now, I think for the next 4 years, there's going to be a lot of room. And so when you say, okay, I go to Revolut and I have this product which is giving me 3% yield and I don't really know what it is. Yes, Revolut is like offering you some structured product that like someone at a bank is packaged up for them. But it's an incredibly inefficient delivery pipeline. Whereas in DeFi, you go, I turn up to Fluid, and Fluid has access to all of the yields, every single one, right? And there's a much more efficient market for yield. And I've got this particular asset and I'm going to get 10% because, of course, like there's a much more competitive market, and someone didn't do a backroom deal with the Revolut CEO to, take him to the F1 and, okay, fine. Here, like, we'll put your structured product in there. Some good salesperson's done a good deal. It's just a very different environment, right? It's much more competitive, much more efficient, much more, efficient market. And so I think that the composability and integration and like aggregation question, what you can aggregate, how you aggregate it, and how easy it is to aggregate are very, very different in DeFi versus in fintech. And you therefore have much more transparency about what the things are that's being integrated, right? Because there's no need to hide it. It's not like some weird backroom deal. It's like, no, where Fluid is taking Sky yield and or Pendle or whatever it is, making it available to you. You could do it directly because you also have access to that product, because definitionally you do. But why would you want to? We give you this nice interface and you can choose from everything.
And for better or worse, we've seen that appetite last cycle. Despite it coming to a very screeching halt with BlockFi and Celsius, and people like the idea of, I can just park Bitcoin here, get 5%. And I know there's a lot of stuff happening in the credit markets which were a lot more flush then, and that's nowhere near what it kind of was back then. But people do want that. They want a really simple, typical user interface, what they've kind of come to expect from, dare we say, the fintech apps of the world. And it's just depositing. They know what they're getting, and being able to provide it with the likes of what you guys are doing at Infinex. I think there's huge demand for that, and I yet to see an application that's kind of filled that void. Completely different. Obviously, one was centralized fuckfest to put it politely, and then what you guys are building. But I think there's huge demand for that.
Well, I think this is the interesting thing about something like Celsius or BlockFi. It's actually the worst of both worlds, because you have these C DeFi wrappers, right? You've got the centralized wrapper that, in theory is inside some reg sandbox or, is compliant in some way or whatever. Turns out probably not. They're probably just doing fraud, but, we thought that was the case, right? But the yields that they're getting are coming from the same source mostly, right? Like they were just going and farming on-chain yields, which you could have done yourself. And so this is where I think something like Infinex versus C DeFi is far better, because you can transparently see where the yields are coming from. You can see the DEX and the liquidity that you're accessing when you're doing a trade. You can go on chain and see everything. It's fully transparent, and it's you have custody of your assets the entire time. Versus, hey, it turns out if you give Celsius your money, you're now a debtor to them, and like, good luck.
Yeah, the escape hatch is much needed, and I don't think people realize how important that is until it happens, which is always the case, and it's quite sad because, as I say, I don't know if everyone got paid out off that shit, but yeah, the self custody is a real thing.
Yeah, yeah, exactly. Yeah, the idea that, like, as soon as you hand over your funds to a CDFI company, right, which is a company, all of a sudden, it becomes an unsecured creditor relationship is kind of crazy, right? And
Mm.
like, people just didn't even realize, like, even like, I kind of knew it, but it never occurred. I didn't give any money to Celsius, thankfully, right? Although, funnily enough, there were a bunch of people that did give SNX to Celsius. They had
Oh
like
shit,
8
really?
million SNX at one point. And so when all of this was unwinding, they were just dumping like full clipping, like just a million SNX at a time. And we were like, guys, like, can you please? Yeah, it was a nightmare. And it's like, the worst part was, that's not even their money. Like, that SNX is
Yeah,
some poor
exactly.
person that loaned them the SNX, not even their money. And they're just full clipping, and they're like, this person's never getting that SNX back. It happened with like a bunch of tokens that they were just dumping on market, right, to try and pay back the debtors.
Nasty.
But yeah, it's crazy. Yeah.
Yeah, like even remember adjacent to that when Robinhood closed everyone's Solana position out at the bottom.
Yeah. Don't give your money to
Yeah,
centralized companies is the lesson here, right?
100%. I think, as I say, you guys have shown what's possible now, and it's the next stage is like, how do you start getting people onboarded so it becomes muscle memory? And I always speak about like muscle memory for specific applications, and I know token incentives can play a huge part in this. You get people over, I don't know, people are running kind of sort of these incentive campaigns, and you start working your way around, and then next thing you know, it becomes pinned to your browser, and then it's your default go-to. So like, how do you start distilling, as I say, this muscle memory? Because once you get kind of a, like, I don't know how many people have struggled to move over from MetaMask to Rabby, and then like it's Rabby to Infinex, and like those switches are quite difficult notoriously, but once you do switch and you realize there's a different way to do things, it makes the old way seem a bit
Yeah.
prehistoric, but we still need to do the
I
convincing
think the
part.
hard thing with crypto is that there is so much jeopardy in everything you do. And so switching costs,
Mm.
while they might be low from a technical standpoint, are like emotionally high, right? You're like, I'm taking my life into my own hands, moving to a different platform. I remember when Frame first came out, and I was like, "Ooh, let me try this," and I tried it out, and like one thing went wrong, and I was like, "Never again." And people were like, "No, no, it's good." And I was like, "No,
Never
I'll
again.
never touch it again," right? And I think that is something that is very challenging in crypto, that you can absolutely buy attention and buy usage, and you can create a lot of noise in a way that it is then not clear whether or not you have product market fit. And so one of the things that we're being very cautious of at Infinex is skewing the metrics in such a way that we can't really tell whether or not we've got product market fit. So we don't want to incentivize usage just yet. We are incentivizing people to come onto the platform. This is an interesting strategy that we've tried. So we're paying out bulls, these points, for people to come and play this game. The game has no value. It's just a fun fantasy trading game. You do that. And then also, like, right next door is this swapping aggregator that does all of the different chains and everything. You don't get paid to use that, but it's right there. And it's like, maybe I'll give it a try. And then we can sort of see, okay, for users who use it once, how sticky is it? Do they come back and use it more? Are we getting more of a share of wallet? Are they depositing more assets over time? Like, there's a whole bunch of things we can get. Once we are really confident that we've dialed this in and we've got product market fit, then we will put some incentives on there and really start, jacking it up and getting people to be incentivized to pay attention.
Yeah, so I'm just going to bring up the UX. I know we've got a little demo video as well, but so as you say in the bull run, I've already played the hand on it, and then as you say, you got Switch in there, and I just want to bring that up. Can you talk us through what's actually happening here? Because again, this is another, I suppose, 0 to 1 unlock, as I was just mentioning. Once you start discovering there's a new way to do things, everything prior to that feels a bit prehistoric. So your team have sent in this video starting out with what looks like USDC on Ethereum, and then our end destination is Sol on, obviously, on Solana. But and then can you also, whilst we're going through this, because Swidge is a new
Yeah.
term. This is a new term as well that you guys have brought into the market. So some people might be unaware
Yeah,
of what
so
that means.
it's
Pretty simple once you
basically,
know
yeah,
once you know what it is.
basically, combining swapping and bridging, right? So the interesting thing about Switch is it has the ability to do a pure bridge. You can just bridge from, USDC from Arbitrum to Optimism, for example, but you can also bridge USDC to Sol, from Arbitrum to Solana, right? And do a swap and bridge in one. So you can also swap on the same chain. So there are multiple different pathways that you can take. Again, in this case, you're just swapping some USDC on ETH to Solana, and what's going to happen is you're going to use a passkey to authorize the transaction instead of signing a message or signing a transaction using MetaMask or Rabby. And it's really as simple as that. Like there's no off-chain stuff. You can see down the bottom, it's going through a bunch of quotes. It goes through, I think we're up to like a dozen aggregators now that it runs through looking for quotes to try and find you the best quote. And then, Solana's pretty quick, right? So it settles fairly fast.
Yeah, awesome. So one of the other questions I had was around this. So I used it the other day to buy. I think I started with Sol and then picked up some Bera, like complete seamless. If I was to do that manually, which feels weird to say manually, but I suppose that's what it is compared to this.
Yeah.
That would be a pain in the ass. So to put it politely, then it's even figuring out which bridge accepts to be able to get over there, and it's just not something I want to do. And then you're also like something that doesn't get spoken about as much, I think, with Infinex and this product is I've had friends and very, very close people. I've had colleagues that have just went to a site which they've known and used every single time. I don't know. Google has something really messed up with regards to people being able to pay for.
Sponsored listings. Yeah.
It's fucked. that should just not be a thing. But still, if it was like signups or whatever, they've went to the wrong link. They've just went through the motions. Let's say used muscle memory and been drained for ungodly amounts of money.
Yep.
Having everything in this kind of like white labeled, like what feels like a sandbox environment, but it is tapping into like the wider products that we've got on use. That cannot be understated in and of itself from an OPSEC perspective. And I even used it the other. Probably shouldn't announce which token it is, but it was a meme coin on Solana that since went down 80%. But still, I could just do everything from one UI, and it just felt, as I say, using everything else after that felt a little bit stupid, if that makes sense.
I think that the challenge with crypto is, you have certain things that you do and you feel comfortable doing, right? And muscle memory, right? Like as you said, you've got muscle memory for a certain thing, and they get safe. They kind of get safe over time. You know them, you know how it feels, and if something weird happens on that interface, you will notice it. You'll be like, oh, this, because there's always a little bit of jeopardy and a little bit of fear, and whenever you're signing a transaction. It's when you go to do something novel that the risk really spikes. Yeah. And if you're not on your game, you're tired that day or whatever, so you go, oh, Bear just launched, I want to go buy some honey. Cool. Okay, you Google best Berachain bridge and a thing pops up and it's like, oh yeah, use D bridge, but it's spelt with a 1 instead of an I or something like that, and you go there and you click sign transaction, you connect wallet, sign transaction, you think you're bridging, and you get trained. And that is purely from the challenge of orchestration, right? And this is the thing that I think Infinex does the best right now, where the delta between the status quo and Infinex is the highest, is the orchestration. So you can discover a new token, that meme coin on Solana or Honey or Bera or any number of tokens through all kinds of different ways. People discover tokens through CoinGecko, through Twitter, through Discords, Telegram chats, etc. We've got discovery pretty locked down. We know how to discover things in crypto. The problem is, okay, you discover it, but what the person doesn't tell you is, hey, I've just caused you to discover, right, by shilling a token to you, this meme coin, and then you go, now it's my problem to find the token and how to get it, and it's on BSC. How do I buy broccoli and which one? And it just becomes all about you, the user, figuring out all of these steps. And you go, well, I really want to buy broccoli, but it turns out there's 3 of them and it's on BSC and I don't have any gas on there. And now I've got to find what bridges support BSC. Oh, I think maybe I can bridge from like Llama Swap but I don't have gas on it. And it just becomes this really challenging orchestration problem. So the best thing that I think that Infinex can do is solve orchestration. There are other things, in terms of discovery and also intent, right? You discover a token, you have an intent to buy it, you want to swap some of your ETH or some of your SOL into this meme coin. Cool. That's an intent that you have. The orchestration is the hard part for the user, and that's where the most risk is. So if you can solve orchestration, you become a much, much better user experience for the average person.
Yeah, I don't know how many times I've seen something and then done exactly that stepwise process you've just said, and then by the time I've finally got around to buying it, particularly if it's like some low cap shit, it's like the opportunity's gone, and then I'm sat eating a 90% drawdown in 24 hours.
Yeah, exactly. And like, I mean, I remember one time I had someone who just started at Infinex, and I was like, oh, let me, they weren't like Web3 native, right? So I was like, let me show you how this thing works. And I was going to bridge to Optimism, and I was going to do something on OP or whatever. And I swear I tried 3 different things and they all broke in 3 different ways. And I was like, oh, this is
if you
like,
can't
this
do
is
it, geez,
right here. Like no better advertisement for Infinex than this.
So this is another thing that upon using Infinex a little bit more, it just starts to make me think, what do you think happens to the infighting between chains and representatives of chains? Because I think if you play this out long enough into where it potentially ends up is, chains don't necessarily matter that much. Applications matter, and it's stuff that people want to actually use that matter. Do you just kind of shift that tribalism towards assets, or does the tribalism go towards specific applications? Because for now, it still draws up a lot of attention between like this infighting. I still don't think the pie is big enough to have this like infighting personally, but yeah, what do you think happens with that dynamic? Because it's quite prevalent in the industry.
I think there are parallels across tech, across decades, right? There were periods of time where the Linux distro that you chose was a matter of like religion. If you chose the wrong distro, it was over for you. And people were like super cultish around, no, it has to be Red Hat, it has to be SUSE, it has to be, and if you use that, like, oh, why would you use that one? Like, the package manager for that is so crappy. And like the drive, like there was just all these like weird esoteric things, right? That enthusiasts cared about that the average person would never care about. And we know that they don't, because like, the year of the Linux desktop was like forever, in the following year. It's going to be 1998, guys, like for sure. This is where we're going to get it, right? And it never happened. And I think that you see that play out in other areas like databases. There was like the NoSQL movement and a bunch of different trade-offs and viewpoints architecturally around how you build applications using different database architectures, and they are meaningful and important, but only to like one very narrow group of people, which is the people who are building the shit, right? It's not meaningful to a user. No user would be like, oh, I'm going to choose Bybit because it runs on SQL, and I only use applications that run on SQL. Like that's insane, right? Like you use an application because it gives you good features, and it's performant, and you don't know why it's performant. Like it might be because it's running on Cloudflare, or maybe it's using AWS Nitro. Like you don't know, but you know how it feels, right? I think we will get to a point where chains become something like that, where chains are competing for liquidity, they're competing for block production, for block space, for all of the things that are important, and so chains can still win. And chains can win specific use cases, they can win categories, they can win all kinds of things. What they probably won't win over a long enough time horizon is end users. In the sense that, now, I could be wrong on this, right? Because of the existence of equity-like assets in the form of tokens. So if you think about it, all of these database projects listed, right? And people bought them, and they were excited to hold the equity in the companies because this one was going to be used by Shopify, and this one Microsoft was supporting them, and there are all of these things. But that was like a capital allocator view. It wasn't like the end user. Like you may have held equity, right, in some modern database company, but you probably wouldn't have even known if some random application you're using had that stack, right? And so I think there will be a world where there's people who are speculating on blockchains in the same way that they speculate on anything, right? And they're investing in a thing, but it won't drive their usage of products at scale. So I do think that that's the way that it goes, but who knows? Maybe we're in a different paradigm, and tokens, infighting between tokens just continues forever. I don't know. That's bearish, but it's possible.
Yeah, I think everyone needs something to fight about on the timeline at some point. So I've got a few questions about certain products and potential products and the whole product suite. As I say, I've been seeing them come online as I've been using Infinex, but is there any kind of this key distinction between a vault and a wallet? I know recently I had to move everything that I had from the vault to the wallet, and if people are coming on there and they see a vault and a wallet, what's the kind of key distinctions between two there?
The distinctions are in the OPSEC of the user. So how the user's OPSEC is set up. There's a little bit of a breakpoint between if you're an OG crypto native, there are benefits to having your assets in a vault. If you are a complete novice, there are benefits to having your assets in a wallet. So one of them, as in the wallet, doesn't put any onus on the user to maintain custody, right? You have your passkey that's in your password manager or in your iCloud account or something like that, or in Microsoft. If you lose that, you can recover using socials or whatever. But if Infinex were to be nuked, you might have some challenges getting your funds out. Now, we don't plan for that to happen, and there's also some contingencies there, but you're more likely as a novice to lose custody of a seed phrase or a private key than Infinex is to be nuked to glass, realistically, right? So that's a good trade. It's hey, I have a wallet because I can just rely on Infinex's infrastructure. It's still self-custodial, but I can rely on Infinex's infrastructure to be there if I lose my passkey and I have to reset it, right? And that is a good posture for the average novice person. But if you're no, thank you, I want full on-chain recoverability, and I don't want to rely on any infrastructure other than the Ethereum blockchain where my ETH is, but I still also want to get this usability, then a vault is actually a better posture for you. So it sort of depends on your personal OPSEC and how comfortable you are. But the funny thing is, a lot of people are I've got this. I can secure my private key in my seed phrase. Don't even worry about me. Like, I'll put all my stuff in a vault. And then 20 minutes later, they turn up and they go, I was drained and I lost access to my seed phrase. And what do I do? And we're like, just move your assets to the wallet and you'll be safer. So, even people who think they're sophisticated and have good OPSEC can still make mistakes, right? So,
100%.
it's just different OPSEC posture.
Great. And so, as we said at the top of the podcast, a lot of people who probably should have BTC exposure don't have BTC exposure. So, what are the? I've seen some announcements on the timeline, some BTC and legacy token integrations. Like, what's that going to look like? Because I, for one, would love to see that immediately on there. And is there any trust assumptions? Obviously, that's going to be the immediate question that people throw up. And what does that
100%.
kind of rollout look like?
Yeah, so the first rollout will rely on near chain signatures. So there are some trust assumptions there, in that the near chain and near's MPC network will remain live. But we will eventually move away from that. So you can have a different OPSEC posture. You can buy Bitcoin, for example, or XRP, and you can put it into a native wallet on that chain. And again, one of the challenges with Bitcoin is it's not a smart contract chain. So if you want to put it into an on-chain recoverable state, you'll need either to have like a native multi-sig where you store the private key for the multi-sig somewhere, which means you need to understand OPSEC around seed phrases and private keys and all that stuff. But you can do that. That will just be rolled out progressively for different chains. So you can have native assets on the native chains, or you can have them inside the near chain signatures network, where the assets are stored on the chain, but they're secured by this chain signature scheme that uses Near's MPC wallet.
Great, yeah. And how do you tap into those, I suppose, cult-like legacy assets and communities, your XRPs, your Cardanos, your even Litecoins to a certain degree, and your XLMs, and because like regardless of what people think about them, like I'm not one to kind of judge what people want to hold in their portfolios or anything. It's a huge area of the industry that people kind of usually poo-poo and just kind of forget about, but protocols would kill for the level of adoption and community and TVL and everything that comes with that. So like, how do you leverage that?
So Robert Leshner coined a very funny phrase called chain racism. And basically, he's like, there's a lot of Ethereum people that are chain racists, right? And anything that happens on, Stellar or XRP or whatever is like just not beneath consideration, right? Like beneath notice. And so I do think that there is a kind of ignorance as to like even what's happening on those chains. They're dismissed out of hand. And so I think that one of the cool things that Infinex will do by getting those people into a place, let's say you've got, XRP and Cardano and Litecoin is your portfolio. It's a 30 30 portfolio of some boomer coins, right? And you go, yeah, I've never tried Solana because it's too scary, and like I just keep my assets on Binance, and Solana, like I don't know, like I don't know about these seed phrases or whatever. You can deposit your boomer assets into Infinex and very easily using Swidge swap from XRP into some Sol. And now all of a sudden you can access Jupiter and buy some meme coins very easily without needing to upgrade your understanding of OPSEC and security. You have this Web 2 security model that you already know with all of your platforms, but also Binance. And it just looks and feels like the same thing. So I think that will unlock access to on-chain activity for some of these people that have been sidelined and been stuck in legacy assets in centralized exchanges, which is really exciting. Being able to use those assets for collateral in DeFi, or being able to swap into them, or borrow against them, etc.
Yeah, I think even like when you're like true beginner, which I'm sure this like Infinex is a great product for as well. Even just finding a common denominator asset, say if like you had ETH and wanted to go to I don't know, XRP, for example, and there wasn't a ETH XRP market, it's just like, well, I have to swap into USDT and then find the US. Like, even that I know for a fact I've been helping a lot of people who have zero understanding of like how the markets work. It's like that is sometimes even a step too far. Just having to find two common markets. So
Yeah, it's crazy.
So I have to ask because I'd feel stupid for not asking. We've seen a lot of these, I suppose, AI interface, chatbot interface, kind of coming to the front. Swap me $200 worth of Solana to USDC. Is there any merit in this form of UI UX? Is this something that you guys have looked at, and do you think that ever has a place in what you guys are building out, or do you think it's a little bit redundant?
Look, my view is that at some point, in the future, depending on your, timeline for AI adoption and scaling, everything will be some kind of natural language interface. Almost every single thing that we do. So it's inevitable, right? So for any category of thing, right, like whether it's ordering your dinner or buying a shitcoin, it's all going to happen via some kind of AI like interface. Whether it's natural language text or voice or sub vocalizations through some implant in your jaw, like who knows how it actually, or neural link, brain implant. Like we will get to a point where that is how we interface with the world. It's simply a question of what is the sequence of things and which things are harder than others, right? So I would suggest that ordering your dinner, in terms of, again, not to overuse this term, but in terms of jeopardy, right? You go to order dinner via an AI chatbot, it can't go that wrong, right? Like it's probably not going to, accidentally nuke your house, right? Whereas if you say, hey, I want to buy some XRP to an AI chatbot that has like, full access to your main wallet, and it misunderstands that and yeah, like full ports it into something with low liquidity, there's just a lot more risk there, right? And so I would want to have ordered 100 meals by the time I give a chatbot $10 to go and YOLO into shitcoins. So I think that the sequence of these things will be really important as they get more robust. One thing that I do also believe, though, is that the way to reduce the risk is to constrain the surface area, which means if you have a chatbot that is naturally constrained to certain function calls and certain things that it can do, that you can reduce the risk and reduce the attack surface, or the margin of error, and that is also probably easier for something like Infinex to do, or some other full stack application to do, to put some guardrails around these things. I do think that you also reduce the utility for the user, right? Like if I can just click a button and buy something like in a Switch interface, now saying like, hey, chatbot, can you please swap? Like it's actually clicking buttons is faster. So there's a weird uncanny valley of like, I want to do something weird and I don't know how to do it. But also I could get heavily wrecked in trying to do this weird thing that I don't understand how to do it, right? Versus I've got a button in front of me and I can see the number and I just click it and it works, right? So, finding the sweet spot there is going to be an interesting challenge for the next 2 to 3 years, I think.
100%. So I appreciate we've got 10 minutes left. So, and I've got a lot of stuff I want to go through. So,
all right, let's be quick. I'll speed it up here.
So there's always a bull market somewhere. The Patreon NFTs, they single-handedly saved a lot of portfolios. Any speculation, not for founders to talk about price or anything, but have people just begun to wake up? Like, has there just been a lot of attention on the tick up there? Like,
it's really low liquidity, honestly.
Right.
Like there's 100,000 patrons. I think there's like less than 1,000 that are held on chain outside of the vesting contract. So that's like less than 1%, right? Are floating around. Now there's a bunch of people who have liquidity that could pull it out of the vesting contract. That probably like 3, 4, 5%. But It's very low float. Most people are locked up. Almost everyone, I think 85% of people chose the longest lockup, which was like 1 year cliff with 2 year linear vesting. Even after a year, I think we get to like 7 or 8% or something like that are liquid. So it's just low liquidity. I don't think you can take it too seriously. If you want to buy 100 patrons, it's hard, right? I mean, and this is the fundamental problem of NFTs, and I think that Luca talked a lot about this in going from NFTs to the Pengu token. Is if you are a small player, this NFT costs $5,000. Unit bias, you're like, I don't have $5,000, it's not fractional, so you're priced out, right? So that's annoying. On the flip side, if you're a whale and you're like, I have $5 million, you are like, I can buy $100,000, and like I want to buy 5 million. So you fall into this weird, like illiquid uncanny valley, unfortunately. So I don't know that we can take the patron market cap too seriously. Obviously, if everyone was dumping it, the price would be lower, and not that many people are selling. So I guess that's bullish, but it's too illiquid to draw any conclusions.
Yeah, just a side tangent there. Every token that is claimable for an airdrop, I don't know what happened to just airdrops where they just used to land in your wallet, but any tokens that are claimable and aren't on Infinex feels like a scam. I claimed my Pengu the other day, and it's like, right, I can just claim this, and I have zero care about what's about to happen because I just know it's going to land. So that was
Yeah.
great. So kudos on that one.
Yeah, thanks. We're working hard on airdrops at the moment. Yeah.
So I have to also ask about synthetics because I've seen some people on timeline saying synthetics has been solved. It's been saved. This SIP 420. What can you tell us about that?
So synthetics was going through a transitional period that left a lot of tech debt and a lot of like just legacy stuff laying around, to the point where like genuinely, and I say this as someone who's like pretty good at reasoning about like chaotic systems, I can't keep all of the nonsense that is spread around the world of synthetics in my head at one time. Like I have to actually chunk it up. I'm like, I can't reason about the Arbitrum deplatforming at the same time as the 3 different versions that are running on Optimism simultaneously, and what's on Snap. It's insane, right? So how could someone else, and like I helped to build this, right? Like how could you possibly expect someone else to be like, oh yeah, I'll just go to like V2X on Snack? It's like, it's impossible. So one of the big initiatives that I think has been under prioritized is just cleaning up all of this stuff and getting it to a point where there is a really simple call to action that someone can make. And so I think are like on track for that. We'll deprecate everything on Optimism over the next like 6 weeks. The goal is move everything to Snacks Chain. Wind down all the legacy markets, wind down all of the legacy vaults, everything over the next like 6 to 8 weeks, and then get to a point where we can relaunch the entire thing with this pooled staking model where you don't need to have a finance PhD to be able to work out the risk profile. You can just put some money in, and you can see what the APY is, and it's really easy. The early days of synthetics, you genuinely were rewarded for making things as like obtuse as possible, right? Like the harder it was to do, the more points you scored, right? Like it was all enthusiasts, and they were like, "Oh, this thing's insanely hard to understand," right? Like I can spend 3 days on this, right? And they're like, "Hard buy," and we just like we got out of that era like 3 years ago, 4 years ago. People just want a simple thing. Like the enthusiast audience is tapped out. So this is all about just bringing it up to like a modern tech stack, a modern UX, and making it really easy for people to do things.
Nice. And some cross pollination between Infinex and synthetics coming.
Yeah, I mean, we have like a bunch of the synthetics people, not the whole team, but some of them in the Infinex office here, which is helpful. I can walk downstairs and yell at them to do some more mechanism stuff that I've cooked up overnight, and it tends to work. So I think that it's working quite well for me, because most of where the effort is in redesigning the mechanism to be more efficient, particularly the staking mechanism. It had been languishing for a long time. So I'm pretty excited about the redesign of the overall staking engine and getting staking back up. I think we're at like 50% of the SNX is already migrated to this new staking engine, which is insane. It's been like 10 days.
Awesome. Is there anything I might have missed out from Infinex that you might want to make people aware of? I've got some a quick fire year or nay around potential products for Infinex that, since I've been using it, I don't know if that makes sense or not. So who better to ask?
Let's do it. Let's go to the round, because if I leak any alpha, they're going to fire me. So I'm...
All right. So again, just getting back to the idea of, I suppose, aggregation of assets. Is there any appetite for having a native Infinex LST, whether that's on Ethereum, Solana, whatever RFA, if everyone's going to pool all the capital there and then you've just got one-click deploy?
Honestly, no. We are looking at a bunch of different LSTs, LRTs, and we've got some really great partners. One of the things about those kind of assets is typically they do really well when they have points programs coupled to them to encourage liquidity. It would be a false economy for us to spend our tokens to try and bootstrap an LRT or LST when there's other people that are doing a much better job. Our goal is not to build protocols, it's to integrate them and make them accessible. And so there's a bunch of amazing different LRTs and LSTs out there that we can integrate. We don't want to try and compete with them.
And I think I asked you this in Bangkok, but I thought your answer was great then. So we'll see if we get the same answer now. But with how well the patron, I suppose, activity was using Infinex, just this complete chain agnostic way for anyone to participate, could you not reuse that? Could you not reuse that for people who want, like anyone who could serve a really good purpose and they want to kind of get certain products to market? Is there any thoughts around that one?
So the funny thing is, right, you build software and you're like, this is my tendency, and my engineers absolutely hate this, is like, why don't we make it generalizable, right? And then our head of product is like, why don't we make it specific to the thing that we're trying to solve, you idiot? And I'm like, yeah, we might want to use it later. And they're like, we might want to do a lot of things, like just like do the thing, right? Like, why are we wasting time trying to generalize this thing? And I think it is a tendency of some people like myself to try and like make a generalized solution to a thing and solve all the problems. Thankfully, I was overruled, and so we built a very specific solution to a very specific problem that is, you can extend it, but it's effort, right? There's lift there. So I think until we had someone who was going to be a partner that was like, I really need this cross-chain platform to launch my token or an NFT or whatever. Can you help me? I think that until we had that person as a counterparty to work with, it wouldn't make sense to build out a generalized platform. We'd want to, do another specific thing that makes it a little bit more generalized, then another specific solution that makes it a bit more generalized, and eventually you get enough of a pattern where you can then build a generalized launchpad.
Okay, I'll wrap up with this one because I know I'm taking up too much of your time. So more and more advertisers for us being like on the media side and the research side want to know a little bit more of, I suppose, an on-chain footprint from particular people who are reading newsletter. I don't feel comfortable with people connecting their wallets to blockmates.com, but if there was option for passkey signing with the likes of an Infinex or something like that, that is more feasible to me. The current flow of which they're expecting publishers like us to work doesn't make sense. Because the wallet that you'd sign into on Blockmates isn't the wallet that you'd use for whatever you're doing on chain, because that just doesn't make any OPSEC sense whatsoever. But I'll leave that there if you want to answer it or not.
Yeah, so I think this is a very obvious thing, and we are starting to experiment with connecting socials. We do a lot of stuff with Kaito, and in order to triangulate what is happening, their kind of unique ID in their system is your Twitter handle, right? So, whatever your X handle is, they use that to basically, figure out who you are as a user. If we have that information inside Infinex, it just makes it very easy for us to go, oh, okay, well, there's a Yapper with that handle and we have their user account because we've been able to, associate it with their X handle, which they've connected via the API. And, there's just all kinds of stuff you can do. And then you can go, now for you 50 people, there is a dedicated Telegram channel that you can join, right? That's gated by something, you've got the Blockmates NFT that you purchased on Infinex, or maybe, who knows, right? And so there's things like that we can do. And I think once you have a pattern for that, then yeah, we could give you guys the ability to do Infinex Connect, and your users, if they have an Infinex account, could just connect it, and then you could get a bunch of information about, what chains are they on, what are they doing, and they can make that available to you or not, at their discretion.
Amazing. Ken, thanks so much for at the top of the hour. Thank you very much for your time. Anything you want to leave with before we jump off?
No, I really don't want to get fired. Not this week, so I'll leave it. No more alpha leaks.
Awesome. Right, thanks everyone. Please like and subscribe. See you next time. Over and out. Bye.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions.